Hello, trading is closed on October 4th, 2017. We had a few calls yesterday. I was looking for lower prices absent a gap up. This was my target, 25.31.97. The day's low was 25.31.80, which is a direct hit. There was support under the target. We looked for a pattern with an early high and a late low, and said the important thing was the times and not the shape. This is a pattern with an early high and a late low. Now I'll grant you, had I called for an early low and a late high, you could say that was correct too. I'm reasonably confident the early high to late low is the correct pattern because these change in trend times recur every 32 calendar days, and you can improve on it somewhat by keeping the day of the week the same. You multiply 32 by 7, you get 224 days. So you go back every 224 days till you find a pattern which can't be read either way, till you get one that's clear. And if you go back to December 2, 2015, you can see how the times match. It's an early high, it's a late low, you get this middle of the day move which doesn't fit with the pattern. That's an early high to late low, and I think tomorrow's going to be an early high, and the day after is going to have an early low. Typically, when you have a high to low pattern, if you don't close near the day's low, it's positive, unless you gap down and go under this low promptly. On the other hand, we rallied all day long, couldn't close over any of these highs. That's negative unless we gap up and go over them promptly. So the odds are, the most common thing is we gap outside the day's range tomorrow, or at least have a gap and move out of it promptly. And the next most common thing is we close a little change, have the big move on Friday. As far as tomorrow's targets are concerned, MEJT said ultimately lower prices would print. We got the minimum. We almost always get more than the minimum. The odds are good. I think we're going to undercut this low. We also have MEJT saying that move is false. Here's our target, 25.34.56, most likely by early Friday. We came close enough to the 25.38.85 target to make it optional. Doesn't have to print. If this is a top, and I've been trying to call a top for a long time, if this is a top, it probably won't print. And when you get a direct hit, but you don't know until it's too late, but if you get a direct hit, you usually get a pretty good sized move in the other direction. Now, I've been asked about long-term calls. Am I still negative? I think the rally has gone higher than I thought it would go. It surprised me, to be perfectly honest. Some things haven't changed. One thing which hasn't changed is this rally is still in threes, and this is an overlapping corrective wave. There's a story, supposed to be true, it might be apocryphal. Story was about a woman who had a great long-term track record, and she had a system. And her system was she purchased her stocks completely at random, but if she was 3 points in the hole, she would sell. And that was the whole system, and apparently it worked. The point is, you have to set a stop loss at some time. I thought this August high was it. I had valid reasons for doing it. If it worked, there would be a huge drop. If it failed, I had a close stop. It's too bad it failed, but if you keep your stops low, eventually you're going to get paid off. Now, what about the chances this is a high? If this is a corrective wave, the high could come at any time. The point is there are a number of prices, that will work. This is one of them. If you move B to here, and that's A, and that's B, you'll see that wave C is exactly 38.2% of A. Wave B itself has some beautiful fib relationships. There's your A, your B, and your C is equal to A, and all these subwaves work. And if this is wave C, you got a 5-wave move up. You don't have to know much Elliott to know that's 5 waves. And wave 5 is equal to 0.618 times the range of wave 1 to wave 3. So at least you could justify it here too. You could have justified it yesterday and the day before too. Now I have a timing system I'm working on, but that's not my only timing system. That's the one I just showed. This is another one I'm working on. This is a chart that goes way back to 2015. Here's the 2016 early low. You forget about the actual low, take the low in front of it, the first high after it, set it to 100%, and then take some Fibonacci ratios. Here's 61.8%, that's a hit. 100%, that's a hit. 138.2, that's a hit. 161.8, maybe. Here's 200, that's a hit. Here's 223.6, that's today. And you can also go way back to the beginnings of the rally in 2009 and set a Fibonacci grid, and at today's high, 88.66% is a hit, 78.6 is a hit, 61.8, 50% is close, 38.2, 23, 6, 14, 6, you get the picture. It's a perfect Fibonacci grid. So if this is the high, and I'm tired of trying to call it, but if that's the high, you can look back years from now and say, gee whiz, couldn't you see that? It was so obvious. So the point is, there should be a high in here someplace. It could be today, it could be some other day. If we start to drop in spades, I think you can justify it from today's price. Otherwise, I think for tomorrow I'm looking for most likely a gap in an early move outside the day's range. Next most likely is a close little change. Have the big move on Friday. One target's optional, doesn't have to print, but usually does. This is my target by early Friday. So good luck to you in your trading, and that's today's call.